All right, let's pull back the curtain and peek inside the digital brain of a modern bank. We're talking about the software that handles every single transaction, every account, every bit of data. We're going to see how it all really works. Think about it. You tap your card to buy a coffee, you Venmo a friend for dinner, your paycheck just appears in your account. It all feels so seamless, almost like magic, right? But behind that simple, instant tap is a massive, complex system firing on all cylinders. So, what's actually happening under the hood? Well, it's all being orchestrated by the bank's core application. You can think of it as the bank's central nervous system. And today, we're going to break it all down. By the time we're done here, you'll get the blueprint that makes all of modern finance tick. Now, to make this all make sense, we're not just going to look at diagrams. We're going to follow the financial journey of a fictional customer, let's call them Alex. We'll watch as Alex opens an account, buys things, gets a loan, and we'll see how the system protects them every single step of the way. So let's meet Alex. Alex is about to open their very first bank account. From this exact moment forward, every single financial move Alex makes will be processed, recorded, and secured by this core system, the bank's digital brain. First things first, before a single penny can be deposited, the bank has to know exactly who it's dealing with. This is ground zero, the most critical step of all, locking down a secure identity. This whole process is officially called Know Your Customer, or KYC for short. And this isn't just a suggestion, it's a massive legal and security requirement. The system's first job is to create a digital identity for Alex that is verified, trustworthy, and completely unique. It's the foundation for everything that comes next. So how does the system build this digital identity? Well, it's kind of like putting together a puzzle with different data tables. It all starts with the main customer table. That's Alex's core profile. Then it links out to their customer address, connects to a customer document like a passport scan, and this is crucial. It runs checks against global security databases like sanctions watch lists. It's all about building a complete, verified, and compliant picture of Alex. Let's just zoom in on that central customer table for a second. Everyone gets a unique customer ID. This is the golden key that links every single thing Alex ever does at this bank. And check out that status field. Think of it as a master on-off switch. If Alex's account is pending or closed, the system just won't allow any other actions to happen. It's a really simple but incredibly powerful control mechanism. Okay, so the bank knows who Alex is. Now for the big question. Where does their money actually, live? We're now heading into the digital vault, the core ledger of the bank. This part of the system is absolutely obsessed with two things. One, creating a rock-solid, secure container for Alex's money, which we call an account, and two, keeping a perfect, unchangeable, permanent record of every single financial event that ever happens. There is zero room for error. So here's the game plan. The account is the box that holds the money. The account balance tells you what's in the box right now. Every deposit, withdrawal, or fee is logged as a transaction, and all of those individual transactions get posted to the general ledger. You should think of the general ledger as the bank's ultimate book of truth. It's the immutable history for the entire bank, proving that every single day, everything is perfectly in balance. So how does it guarantee that perfect balance? Well, it uses a principle that's been around for centuries, double entry bookkeeping. For every credit that goes in, an equal and opposite debit must come out somewhere else. In the digital world, this isn't just an old accounting trick. It's an incredible error-checking tool. If a single bug tried to create money out of thin air, the whole ledger would immediately scream that it's out of balance. It basically polices itself. This system also explains something you've probably seen on your own banking app, the difference between your ledger balance and your available balance. When you swipe your card, the bank immediately puts those funds on hold, so your available balance drops right away. But the ledger balance, the official book of record, that doesn't change until the payment fully settles with the merchant, usually a day or two later. All right, Alex is set up, their account has money in it. Now it's time for the fun part, putting that money to work. So how does the system handle the millions of daily payments and card swipes that we all take for granted? Let's follow the money on that simple coffee purchase. When Alex taps their card, it feels instantaneous. But in the background, this incredible digital dance is happening in milliseconds. A card transaction record is created, which tells Alex's account to put that money on hold. Then, later, usually overnight, the payment officially settles with the coffee shop's bank, and only then does the master general ledger get its final official update. It's a whole 5-step ballet from one simple tap. So what are the building blocks that make this all happen? Well, you've got the payment instruction, the order to move money. You have the physical card, which is really just a key to an account. You have the card transaction record. But look at that last one, the card token. That is where the security gets really, really smart. Let's talk about tokenization for a second. Here's the deal. The system never sends Alex's actual 16-digit card number to the merchant, ever. Instead, it generates a unique one-time use card token for that specific transaction. So what's the point? If that coffee shop ever gets hacked, all the bad guys get is a bunch of useless expired tokens. Alex's real card details stay safe and sound inside the bank's system. It's a game changer for payment security. Okay, let's fast forward a few years. Alex's financial life is a bit more complex now, and it's time for a major milestone, buying a car. Now, this is a way more complicated process than just buying coffee, and the system has to handle it perfectly. The loan module is built to manage a long-term relationship. It's not a one-and-done transaction. It has to handle the initial application, the decision-making process, handing over the money, and then meticulously tracking every single repayment for years to come. The data here really tells the whole story. It starts with the loan application. Once that gets a green light, it becomes a loan record, which holds all the key terms, like the interest rate. Then, the system automatically generates a detailed loan schedule, mapping out every single future payment. And for a car loan, it also links to a collateral record, the car itself, which secures the loan. It creates a perfect, auditable trail from start to finish. Now, throughout this whole journey, from opening the account to buying coffee to getting that loan, there's one part of the system that has been silently watching, always working in the background. This is the unseen guardian, the fraud and risk engine. This system is constantly scanning for anything that looks out of place. A fraud rule might be something simple like flag any transaction over $1,000 that happens in a foreign country. If Alex's card is suddenly used somewhere they've never been, that rule triggers a fraud alert. That alert can then automatically open a fraud case for a human investigator to look at. It even uses a device fingerprint to know if a login is coming from Alex's trusted phone or some random computer. It's pretty clever stuff. So as we wrap up Alex's story, what are the big takeaways? First, security is everything, and it's built into every layer, from that initial KYC check all the way to tokenization. Second, accuracy is non-negotiable, and it's all enforced by that double-entry general ledger. And finally, you can see how all these different modules connect and work together to let you do everything from a simple tap to pay to getting a complex loan. From that first identity check to the complex loan schedules and the silent fraud monitoring that's always on, you've now seen the incredible digital machine humming away behind your bank account. So the next time you tap your card or check your balance, maybe you'll see a little bit of this elegant, powerful system doing its job. Thanks for diving in with us.